When determining a bias, especially higher time frame like 4 hour to daily, and we have a gap in price, do we take the gap, let's say bearish fair value gap, if it creates one, together as a bearish confluence if price closes above the bearish gap? Yeah, that's correct. So that does support our bias, and it does form a bias. If we have a, for example, if we look on the 5 minute time frame, okay, we have this 5 minute bullish gap. Now this is the same which applies to all time frames. It doesn't matter if you're looking at the daily, the 4 hour, or the hourly time frame, anything. So for example, this 5 minute bullish gap that's currently been respected, it supported a bullish bias, price traded and took out the high, which then neutralized the 5, okay? So the 5 was neutral. So right now the 15's bullish, and it's bullish until this minor buy side point here. And that's the only point of bias that we currently have, is that the 15 is bullish towards the high. So going back to your question, if price was to trade into this bullish gap and then close below at this area, but not trading into the next 5 minute bullish gap, it would then be bearish, and it would be bearish to the next fair value gap or low, whichever one comes first. But this bullish gap below it comes first, so as soon as we trade into it, we are bullish. If this bullish gap here wasn't there, and we can just get rid of this, if that wasn't there, then inversing this bullish gap would be bearish until the next low or bullish gap. But assuming that's not there, it would just be the low. So when we take this low, it would then be neutral. Now I'm the only one to explain bias in that type of way, but hopefully you guys understand it. I don't know the way that you guys were doing bias before. Everyone had it in their own different ways, using many different PD rays at once. New week and new day opening gap. Yeah, so they do actually act as a point of bias which we can use for price. That's correct, yeah. From where yourself learned this bias technique, is it by trial and errors? I've really been struggling before due to fluff YouTube for bias. So I'm the creator of this bias. Now I don't want to sound like a mathematician or a magician, right? But this is, yes, a form of bias, and the way that we determine it, okay, based off extensive hours of backtesting on the way people determine bias. Now I found this way, based off imbalances, working from higher time frame to intraday, to be the most high probability way of determining bias. Now I did 6-month, 8-month periods just off one PD ray, not just imbalances but also off order blocks, sweeps of liquidity, and many different points that you could base some sort of bias off. And this is the most efficient, non-guessable result for bias that you will get. Yeah, that's correct. Yeah, so new week and new day opening gaps, yeah, they are fair value gaps for bias. So accumulation, obviously we are looking at manipulation here. I would love to see ES push lower towards London, and then as we trade into the second AM macro, we could look for longs from London lows being swept. So if we did have accumulation and then manipulation of London, we could then look for distribution towards the high. So we'll see if we get that. Now the reason why we didn't take this long here, which you can see, is because when price shifted market structure, yes, we do have a inverse of a bearish order block paired with the gap on ES, a shift on both, a sweep of sell side on ES and a bullish SMT on NQ. But the reason for no entry on this position here is because when we shifted, we ended up taking out one of the highs, which we'd use to either trail our stops, and it would be the first draw for the trade of this minor buy side. So now we want to reseek sell side. Now it's not the cleanest, but it is paired with the gap on ES. Well, I mean, it's social media, isn't it? You know, everyone likes to mislead each other just so they can get a couple clicks or people to watch their videos or whatever. Or they have, you know, the first 3 seconds of a reel kind of trying to catch their views. I don't give a shit whether you watch the video or not, you know. So I don't put no catches in my videos, you know. If I post a video, then it's just based off education. It's not I'm trying to catch the view. I literally don't care. So as long as the viewer chooses to watch the video and gets value out of it, you know, that's the main thing right there. Not getting hooked into some bullshit that you don't need to watch, you know. But that's majority of social media, and that's why they're not very transparent, you know. That's why you got other traders running prop firms as a so-called profitable trader running a prop firm, which prop firms actually do go bankrupt, by the way, like the Forex prop firm that we've seen about a year ago went bankrupt, and it only goes bankrupt from profitable traders getting paid out, or they have a huge lawsuit. Either one will take them out. Well, I mean, anyone who's in longs here, they must be having a great time. Having an absolute blast, they are. So, what, 20 minutes? What makes this a good order block for ES? I think the following candle is the same size. So, it is the same size. It's not essentially engulfed, but it's closed flush with the previous candle. So I do take that to be an order block. It doesn't actually have to close below, as long as it engulfs it, essentially closing completely or flush with the previous candle. Now, an actual cleaner order block would be one like this, right? We have a series of up close candles and a series of down close candles, and this candle engulfed the up close candle. This is going to be a nice, clean, bearish order block. But, for example, we still take this. There's the difference between high probability and low probability order blocks. This would be a high probability order block. So when you have a series of up close candles and a series of down close candles, and you have a nice prominent high set with an aggressive sharp move lower after, or higher for a bullish order block, okay, that's when you get high probability order block. But one like this is not as high probability, but we still take it as an order block. There is absolutely nothing algorithmic about current price action at all. Nothing. Every sort of PD rate is consistently getting disrespected, both bullish and bearish PD rates. Right, so we trade into a bearish order block, but we trade into a bullish order block. We inverse the bullish order block, but now we trade into a bearish order block. There's no sense of direction as of now. Yes, it's leaning slightly more bearish than bullish, but we don't care. We're just looking at this as accumulation. We're not here to predict. We're here to anticipate this low getting taken. I want to see a point of manipulation. I'm not saying that price won't go higher. It can very easily, and I am with price to be bullish as of now, to trade to the high. So yes, bias represents for it to go to the high anyway, but what we want is manipulation of the lows. So if we do get what we want, then we can actually look for a position, such as taking sell side here or here, and hence why ES would then end up taking London most likely. I saw one of your videos that the market have been taking short-term liquidity, but you still taking trades, but not today. Is that a way to find out when it's walled? When you say walled, do you mean like the trade's not valid? So essentially highs like this and this and this and this, right? So these lows and these highs, they act as points of liquidity. Minor buy side, minor. You could put this as minor sell side, and this would just be a point of sell side now. So look, now price has factored in this bullish order block and it's just traded back into it. So yes, even though we want to see a sweep of sell side, it doesn't mean that we actually get it. We have to wait and see, because right now we've accumulated, we just manipulated below a short-term low, potentially where majority of stops were resting around this area. So price would have taken out many stops, and from the power of 3, the most probable scenario is that price now does reach towards the high. I wanted to see more manipulation, to be honest, of minor sell side, but it appears that we've put in a bullish order block and we accumulated. We only slightly manipulated below this low, taking out potentially stops here, and then it's likely going to head towards that point of minor buy side. Our minor buy side slash sell side on the 5 minute invalidates a trade. Yeah, that's correct, yeah. So if you actually go on the 5 minute time frame, right, these 5 minute highs and lows, they're not points of price to shift market structure. For example, if we was looking for a shift in market structure lower, price is not shifting lower to shift below this low, right? If you look on the 5 minute, it appears as a point of minor sell side. So it's an actual 5 minute swing low. There's a difference. It's not a shift. So if we shift lower but then was looking for shorts and then we ended up taking this low, this would invalidate shorts. So obviously we're waiting for we got seen falling asleep, you know, seen Sean who, what, where. He's falling asleep. Obviously, you know, it is quite boring at all-time highs. It's far less trades. This might be a record actually, guys. I think this might be the longest I have not taken a trade for in my career. It's definitely getting close anyway. Definitely be getting close. So that's now a bearish mitigation block, right? Mitigation the same as a breaker block? Well, essentially yes. And do you need to deter the difference when you're looking for an entry? No. So you need to see, is it an inverse order block paired with a gap upon entry? You don't need to sit there and think, has price taken the high before inversing the order block, or has it taken the low, you know, before inversing the order block? It's either a mitigation or a breaker. That's all you need to know, and that's one thing ticked off the checklist upon entry. Now I see it very much clear as day, whether it's a breaker or a mitigation. The only difference between a breaker and a mitigation is that a breaker block, for example, you know, if we have a down close candle and an up close candle like this, let's extend the up close candle a bit more. Okay, so this would be a bullish order block. Okay, so price action continues to trade. I don't know what drawings this is. We trade back into the bullish order block. It's a bullish confluence for price to continue higher. Okay, until it isn't. If price continues to trade lower and closes below the bullish order block, but let's say previous price action created a high here. The high got taken. So we create the bullish order block, we trade higher, and if we take out a high and then we inverse by closing below, that's now a breaker. But if we create a bullish order block and we trade higher, but we don't take the high, okay, so we don't take any short-term high or low, vice versa, okay, and then we inverse, that's a mitigation. So what's more high probability? Obviously a breaker block, because it has a lower time frame sweep of liquidity. If you have a mitigation on NQ and a breaker on ES, what is that? Very obvious, right? SMT. Hopefully that makes sense. So essentially you don't really need to know the difference between a breaker and a mitigation, as long as you know that it's an inverse order block paired with a gap. And for starting a live account, the minimum would be 5k. That's what I would say. 5k USD minimum for starting a live account, and you can start it with risking, I would say, $300 per trade. Right, we're back in business, guys. So, you know, looking at the second day of macro and monitoring price, we've seen a sweep of sell side on NQ following a bullish bias. So we are looking for a shift higher in market structure here. Okay, I'd like to see ES work down a little bit and preferably take out or get closer to minus sell side to leave some room for the shift in market structure higher on ES as well without taking out that high. So that would be good. We've just put in a bearish order block, so seeing that get inversed with a shift above that previous short-term high is exactly what we're looking for. Okay, so all is looking good. We have the 5-minute as bullish, we have the 15-minute as bullish, and the hourly is about to be bullish, but it's currently as neutral. So that's where we're currently standing, you know, as of now. And we're looking for a shift above this previous short-term high. So after reading the chat, you know, my advice to people of using Apex, if you've not done 100k in payouts with Apex alone, then don't worry about getting banned. Because they don't actually care about anyone who's taking a 2k payout. You know, they really would start to look or monitor you once you get past 100k in payouts. So great prop firm to use, okay? You know, as Dom's been saying as well, it's great for scaling up. You're running 20 accounts, which no other prop firm actually offers. So yes, you can very much scale up to a very good point, and you can take many payouts until you get kind of flagged on their system. Okay, so if we shift market higher here, then we will be looking for a long, and we want to see this bearish order block to then be paired as a breaker block with a fair value gap on NQ or ES. How long did it take me to get 100k in payouts? Well, that was within my first quarter of being profitable. But working up to that point, it did take quite a while. Okay, so we're starting to get a shift in market structure here. So let's see whether this forms a fair value gap. I'll be looking to take a long, and we got to see that ES doesn't take that high. That's not what we want to see. So it shifted above this high. We're creating a gap. If we create this gap, I will be looking for an entry. So we have a potential gap forming on NQ and ES here, which would be a breakaway gap paired with a breaker block, a sweep of liquidity, a bullish SMT on ES with a bullish bias. Very simple stuff, guys. And our entry is going to be on the edge of the fair value gap. We're going to be running a stop placement. If you can always run a safer stop placement, by all means do. Now a safe stop placement in this scenario is going to be at 22.25 points. ES has not taken the highs, so this is fine. And the first 1 minute high, which rests at this area for a 2 to 1, is my objective. I'll be taking this entry, and I'll be taking this with a 22 handle stop. 18 contracts. I'm monitoring ES for an entry there. Alright, let's take a look. Let me just get my other account. All good. Alright, ES just tapped the gap, so I'm in on NQ. And I'm running a stop placement at this area here. So that's a sell stop. And then I'll run a limit. Because we're targeting a point of buy side here, I'm actually having this sell limit just slightly below the point of buy side that I'm looking to target. So you can very comfortably run it at 0.7550 as your actual TP. I'll put it at 7525 just so it's a tick below the equal highs. So that's the trade that we're taking today, is the long with the premature entry on NQ as ES tapped the gap. You see that it tapped it at 10.49, so we entered at 10.49 on NQ. And then as far as monitoring and managing this trade, the only thing that we have to think about is how we are going to minimize our risk if the trade was to play in favor. Now, if you mark using the fib tool from our TP to break even, the 50% point is what we pay attention to. Okay, so you can see price just traded back into that bullish breaker. So that's our bullish breaker, and I'll mark out our gap for you guys so it looks a bit cleaner on the chart. So all we're actually looking at, we're not actually paying attention to whether the trade gets stopped or whatnot. The only thing you have to pay attention to is how you're going to manage your risk. So the first high, which you guys see here, okay, this high, you can label it as TS, right? So it just means trail stops, simple as that. So if NQ was to trade higher and take out this short-term high, we would then get a 50% cut on risk on our current position to the previous low if we was to take this high. Now at 50%, we would minimize our risk to break even if we take a high. So the only high as of now is obviously this one, okay? So we take a high, or we create a bullish gap past 50% of the trade. Now I'm just going to remove some points of this chart, so it looks a little bit messy. So this high is the first high past 50%, where we'd go break even upon taking it, or we create a bullish gap, right? So yeah, hopefully this makes sense to you guys. Pretty simple stuff. Because too many people, they pay attention to, say, worst case of the trade or best case of the trade, but they're not paying attention to what their job is as a trader with monitoring and managing your position. Your job is to manage the position. You're not here to look at a fluctuating, dollar amount. We're here to actually manage the position correctly, because when you go ahead and say backtest this at the end of the week, or you backtest it whenever, right? You're looking at your thought process. You're not actually, whilst you're backtesting, looking at your prop firm's trade sinker and how much you're fluctuating. Couldn't care less, right? You're looking to see, did you have the correct thought process, and did we manage the trade correctly, right? Yeah, what someone spoke about with that growth hormone earlier, I don't think I'll take that growth hormone stuff. It says 100 to 200% stronger than MK677. So I'll probably sit back, do some research. But MK sounds good. But injecting, growth hormone and whatnot, apparently it's illegal in most places, and also it's oh, here we go. Might take out this trail stop area, but it might enlarge the heart and organs and all that stuff. That's a bit mad. So we're not going to be doing that. Definitely not. Are we going to close the position if ES takes out the high? So you'll see here the high we're targeting on NQ is not actually a high which is referenced to ES. But if you want to reference this high, this is what I would have the draw on ES to be. Okay, so with ES taking out this high, there's two cases. If NQ ticks that, yeah. So trail stops now. So 02200. So what we've just done is we've gone from 22.25, 10.5. So we've reduced our risk by just over 50% on this trade. So we're now on for just over 4.1 risk to reward on our current risk. So that's the only thing we focus on, is how we manage our risk. That's it. So if price was to come back to this area of that low, which it shouldn't revisit this short-term low, then I'd be happily taken out of this trade. And the next point where your trail stops is if we create a bullish gap past 50%, or we take this high. And that's when I'll go to wherever my break even is at. So back to the question, with ES taking out this high, there is two things that you could do. Two things. ES takes out this high, you close out of your position, which is 99% of cases. Case number two is that you trail your stops very aggressively to the most recent short-term low, swing low, or just below a bullish 1 minute fair value gap. So it really depends on the price action. But I would be closing out with ES taking out that high. So if ES does take the high, dependent on Doesn't matter where NQ is, we'd have to actually close our position. But that's the only two ways that you can manage a position. With ES creating an SMT against the trade, then you either trail your stops really aggressively or you just close out. And I always choose to close out immediately, because more times than not, probability really doesn't lie in favor of the trader if the opposing asset ends up taking the objective, right? I'm going to delete this fib. I'll leave it on actually. I'll leave it there. You know, many times is that you'll see price revisit that fair value gap that it's just traded out of. It would trade back into this fair value gap. For people that trail their stops just too aggressively, they do get taken out many times, and it would trade back into the gap and then continue to trade back towards the objective, or taking us out as well at the low. But you know, there's also that probable scenario of trailing your stops too aggressively does actually, you know, in more cases than not, take you out of a winning trade when you really shouldn't have been taken out. NQ micros took that short-term high. Should we move stops or wait for NQZ to take that high? Well, I mean, that must be an old message, because we did take the high on NQZ contract. Yeah, don't monitor the micro contract as far as, you know, actually trailing stops and entries. You actually want to base all of your entries off the full NQ contract. You don't want to base your entries off the micro, and base decisions off the micro. Definitely not. The full NQ contract is the one that you want to monitor. Someone said, damn, I fucked up. I mean, how? What exactly did you do wrong, you know? People are going to make mistakes, you know, and don't reflect a mistake as far as dollar amount, and don't say that you done well as far as dollar amount. It's all based on your decisions. So far, this execution has been flawless. You know, I'm very happy. On ES, it tapped the gap and we was in. No hesitations, you know. And we was in on NQ. We set a lovely stop placement in a very nice valid position. Price took the first short-term high. We trailed our stops accordingly. And the way we've managed our risk is right by the book. You know, it's like we are playing the perfect game of blackjack whilst counting cards, essentially, you know. That's how you got to look at it, you know. You can never reflect it as far as a dollar amount. So, you know, what a lot of traders will actually do, with taking this high, they would trail to break even. And that would be too aggressive to trail to break even from taking this high. What you could do, if ES was getting rather close to these equal highs, then you could trail to the previous short-term low. I would only trail to previous short-term low if we get a nice aggressive close, or we create a bullish gap upon taking this high. Then I would consider trailing to this low. But, you know, just as I spoke before about this area here, you see, I've seen the model play out so many times. I knew it was going to come back to the gap. Now, when we came back to the gap and I mentioned about, you know, people trailing their stops too aggressively to break even, see, that's what happens more times than not. And they get taken out. And this is why you got to let price have that room to... One sec. Alright, so we've taken out that high, price is aggressively and is creating this bullish gap here, and we have a bullish gap here, so we are going to trail our stops now to 0.3075, as it shouldn't return back to this area. So what we're now doing is minimizing our risk very close, pretty much, you know, just below break even pretty much. So, you know, algorithmically, price shouldn't return back to a swing low. And if that was the case, it would then invalidate this trade. So that's why our stops are not at break even right now, hence why it's at the low at 0.3075, so it shouldn't return back to this area. You can see ES is very much unalgorithmic. So ES price action today is really all over the place, and our risk is minimized to the point where I'm only risking 4.25 handles on this trade, so you know, a few thousand. So Tarek's come in with a, you know, a point about bias. I mean, once you've entered into the position, regardless whether bias flips against you or not, we don't actually monitor the bias. The bias only comes to the point of entry. Once you're actually in the trade, we don't minimize risk or, you know, manage our trade differently by any means from a bias standpoint. You know, bias only comes up towards the entry, and then once the entry has been made, then, you know, that's the final verdict. It's just the one decision that we make. Yeah, it's very easy stuff. I mean, the current conditions, obviously not the best. It's not really in favor, and it's been pretty slow, you know, the past week. Monitoring price, there's not been any positions for us to take. In the scenario where I got bad fill, how would one you're speaking like the Bible. How would one go about that? Well, I mean, you know, how one would go about it is you take a late entry and you set your stop. As long as you're not running, you know, as long as one is not as long as one is not running over a 30 or a 60 handle stop, and you still got a valid risk to reward where it's not fully affected, then you're going to be okay. And that's how I would, you know, if you get slipped by, or a late entry 4 or 5 points. But to be honest, you know, a late entry in itself, it's only caused by hesitation, because you know the entry, right? And your only job is to look at NQ and ES, and if ES taps the gap, you should be in regardless. So whether there's a problem with one's finger to enter, I don't see. Obviously, sometimes naturally you do get a later entry on some accounts. As long as your stop placement is okay, I would say, you know, the way that you manage risk is still the exact same. You know, you're not going to trail stops more aggressively just because you've got a later entry than another. Alright, so I am going to move stops now to 0.3300. So it's not quite break even yet. It's actually 2 handles below, because we've not taken a high past 50%. But guys, remember, when we monitor ES here, with ES drawing towards that high, is the actual DOL. So, you know, make sure you've got that. Can be quite aggressive sometimes, you know, price action. You won't notice, but ES will just blast through the high. So, you know, let your eyes wander over the screen, flicker between the two, because you don't want to miss an entry or an exit. That's funny, yeah. One shall enter better next time. Yeah, I mean, with entries and exits, you can only actually get that experience when you're trading live. Backtesting, you've got all the time in the world. You can sit there 5 minutes before the trade, and you know, you're looking at a 1 minute candle, which is, you've been anticipating an entry for 30 minutes. So you really only get that experience from taking positions live, but you only actually trick the brain to thinking that you've taken these positions before from backtesting. So both scenarios are very good, but the sense of urgency and, you know, having the wits about you only comes from real life, you know, activities. So that's a bullish order block. You see, we have a down close candle and engulfed by the up close, and we've just traded into it. So this high, right, it's past 50%. So this high is indeed a break-even high for our trade. It's our break-even high. So if one like Nasdaq was to trade above that high, it would indeed send one's stop placement to 0.3500. But if it doesn't, I leave my stops at 0.3300. The price action for, you know, in regards to ES, well, obviously you guys can see that. It has to be close above the high to trail to break even. No, so it's all about, as soon as price wicks above a high past 50% or a low past 50% in a long or short position, that's when then we would actually trail to break even. So it doesn't have to close above the high, just a wick above the high, then we would trail to break even. So yeah, hopefully that makes sense. Yeah, I mean, you know, a lot of you guys definitely watching the stream, and those of you looking to execute this model over a longer time span, you really can't judge the model or have a database of trades you've taken over the space of, say, 4 trades, or, you know, you need at least 6 to 8 months of data of trades you've taken yourself to have an actual win rate and an average risk reward. So you see this low, right, at 0.33, where our stops are at. As a bullish algorithmic trade, it should not take out the low, and if it does, I'll happily be taken out of the trade for a few thousand or a couple thousand. And, you know, preference to you guys, do you prefer trading in the evening time zone or the morning? You know, if we just talk New York time zone, what is people's preference? I much prefer evening. You know, some evenings I'm more tired than others, but that's more based off lifestyle, you know. A lot of people like the morning. It's a mixture, isn't it? You know, it's all personal preference. Yeah, I mean, you know, trading in the morning is good in a sense, but I do find it leads up to, after the lunch macro, for example, it does lead up to around midday, and then you're kind of living for the evening almost. You're living for the kind of, after the UV's peak in the day, you've kind of missed it. You kind of missed the day. For me, it's more less trade in the evening. I've already achieved many things that day, like the gym and whatnot, deals, whatever I done that day, right? But yeah, you know, a lot of people, they're more with it in the morning. Some are more with it in the evening. I'm definitely the evening. I'm in New Zealand. 1st AM starts at 2:45 AM. Wow. Yeah, that's a commitment and a half. But yeah, you know, if you stay there long enough and monitor enough macros, you will, or you can leave New Zealand, you know, and find yourself a better time zone after a few payouts. It's not really ideal trading at 2:45 AM. That's probably one of the most extreme time zones I've actually ever heard in my life. I know Australia's pretty extreme, but I think that New Zealand time zone sounds more extreme than Australia. Well, I mean, it's trading out of a bearish order block, so if it's gonna come back to 0.33, it would be around now. So it's not taken out any sort of short-term lows yet. But the way we've managed this trade, you know, has been spot on, and there you have it. So we are out of that position, which you can see there. So just below break even on that trade for around, let me work this out. So 22.25, and I was risking 2. So it was an 8% risk. So it was minus 0.08 R. Essentially a break-even trade. Okay, so, you know, that was the position taken inside of the 2nd AM macro. Now it's relatively, you know, break-even trade. What we will do is monitor the lunch macro to see if we get any positions inside of lunch. Now, what we'd like to see is, as we approach lunch at 11:45, to 12:15, I would like to see NQ trade lower and take out points of sell side, and for ES to manipulate out of this accumulation period. So as long as you manage your risk correctly, the same every single time, then you're always going to be on the right tracks. Because yes, you can take the right trade, but managing the trade is a mistake that people make a lot, because obviously they'll enter into the trade but then get taken out prematurely or not where they should have been. So if we mark out a point of sell side there, so we'd like to see minor sell side get taken out, accumulation, manipulate below the low. Obviously bias is bullish to send price to buy side, but we would like to see a sweep of sell side. Lunch or not, question mark. Well, I mean, that's why we're discussing now. So we're looking at setting up for lunch and seeing what we'd prefer to see is a sweep of sell side and then look for longs to target the opposing point. We are still in on the micros. Okay. I mean, the low was taken, so all of my accounts have been, I flattened my accounts, regardless whether, as far as the NASDAQ on the full contract, if it gets taken out, I've already flattened my positions on my other screen, so, I'm not here to, if the trade gets invalidated on being the main contract, the full NQ contract, then I manually flatten my accounts on the micro if it hasn't closed. So you can just go on Trade Sync and hit the flatten button and it will close out, all of your positions that you've got on the micro. NQ is technically in. I don't really see how, because with a stop being trailed at 03300, obviously I got taken out by a tick. That's enough to fill limit order. Hence why when I run my TPs, a couple ticks below the opposing liquidity, buy side, sell side, just to make sure that a limit gets filled, because a limit will partially get filled if it hits 033, or it won't fill at all. But if it wicks through like that, that's when it will fill a position. But this type of movement is not what you would like to see when you're in an algorithmically bullish or bearish scenario, right? Price action doesn't tend to give you an entry for price and then accumulate like this and then end up as a bullish scenario to take out a short-term low. Yes, it's fine, it will take out short-term lows, but not then trade back and take out a more extended low like this, So hopefully that thought process of that trade made sense. Yeah, you just got to give the model some time. That's all it is. Especially when you're trading at all-time highs. There's little to no positions that we can actually take unless it's long. So when we see that more 15-minute retracement to take out sell side and then we get a bias of bullish, that's when we get those positions to trade with the higher time frame bullish order flow. But anything such as shorts from all-time highs is 99% of the time it's not going to be a valid trade. Yeah, I see quite a few people are still in the trade, which is slightly weird. Um, but then it's fine at the same time. I mean, if you're still in the position, then I'll just leave your stops at 0.3275 or wherever abouts. You know, people got different entries, so very much depends. But majority of people would be taken out of the position. If you guys are new and trying to hit consistency rules, I found that exiting that amount and going break even to hit your target. And like 50% close from that one. Well, majority of prop firms have a 50% consistency, so following the risk management for evals, you shouldn't technically be breaking to make more than $1,500 on a trade. You should be around 900,000, 900 to 1,000 in profit on a position. Well, what I would say, once you're funded, you just want to trade it as far as not taking partials or a 50% close, because once you're funded, you don't want to try scrape the pennies, right? You don't want to try hit consistency of 5 days of 150. That's not your goal. Your goal is to take the right trade, and the money will come in, and you will reach a payout regardless. You'll reach a payout, and you manage the risk accordingly. If you start a funded account and you enter a losing streak and you have 2 losing trades in a row, which puts you down to $1,400 of drawdown left, well, you then go to the account management section, and then it gives you another 8 to 9 trades until you fully blow that account. So that'll be 11 losses in a row, which doesn't happen, right? So when you're funded, you're just looking at following the risk management according to your current drawdown right now, and we have that inside of the Discord, okay? And then you'll reflect your balance in a few weeks or a month, right? So not too long, and then you can take a payout. You know, whether it's $500 or it's $1,500 or $2K or $5K, right? Dependent on how many accounts you've got, a $500 payout across quite a few accounts is quite a bit of money, right? Can easily surpass 10K. And let's look at, you know, instead of trying to make sure that you, well, here we go. We've got Peter has now become a speaker. All right, go on, Peter. Peter, get one out, mate. I don't know why this happens, guys. People just, you know, they step up to be a speaker, but they don't say too much. I think, you know, they become a speaker, but then they're speechless. I'll give him a minute. He's probably trying to find his mic. Right, let's have a look at the chat. I'm in the Matrix office right now. Friday, I'll jump on. That one is Jams123. What Matrix office are you working? I took my position out at a 1R plus 500 for my first trade ever. And what was the reason for you closing out that position? See, that does deserve a gay flag. Now, the reason why is those type of, you know, that is not me, you know, I'm just speaking based off how you're managing the position, because over the long term basis, that type of thought process is based off emotions, right? And it's difficult to have, you know, a probable scenario in favor of you as a trader. And yes, you would have been taken out of the position regardless, because some people were still in the trade, and I don't know why, but the actual trade itself on the Nasdaq was invalidated from taking the low about 15 minutes ago. But price was previously at the same levels, but you didn't choose to close out here, right? But you chose to close out here. So this would be more of a gut instinct, not based off price action, not based off, you know, anything really. So I wouldn't, you know, don't try pick up that habit too much. It's just advice, right? You know, I wouldn't want someone to comment in the Discord live stream and they comment the wrong thing, right? You know, it's a great positive that someone makes money, right? It's amazing. But to make money over each quarter, every single month we close out in the profit, and to maximize it, okay, you want to be making the correct decisions. See, that's my brother Dylan right there. But I've seen it many times, you know. I even experienced it myself when I was newer to ICT, and there we have it. So that's good before the lunch macro. We've now taken sell side on ES as well. We accumulated and manipulated, and potentially we'll take the London lows. It's quite an aggressive move lower. We'll see if it continues towards London, and this will set us up nicely for the lunch macro. Oh, here we go. We have a new... Yes, brother.
Hello, brother Milo.
How's it going?
Everything good. That was a great risk management. I had a question, but I'm terrible with writing. So
yeah, okay, brother. Go on.
That's in 9:56. We took the short-term high, and you said the trade is not valid.
Yeah.
But I watched your videos, like all of your videos 2-3 times.
Yeah.
Like you watched the ICT Mentorship 2022. And I want to know, and in this video you said that the market had already took a short-term low, but you said that the trade is still valid, and you took the trade, but not here. I wanted to know, is there any way to understand that?
Yeah, exactly. So if you go onto the 5-minute time frame and you look at, if we zoom out here a little bit, so when you see highs like this on the 5-minute time frame, this high, this low, this low, this low, and this high, they're not points for price to shift market structure through. It would be a point of minor buy side and sell side, okay? And with price taking out the high, yes, we shifted market structure, but we shifted enough to meet the first objective, not the objective, which would be this high, which at the time was the 15-minute draw. And with taking this high, it neutralized the 5. The 5 was bullish out of this gap. It took the high, neutral. The 15 is our current bullish bias to form this model and entry here. But taking that high is now no longer a shift in market structure. It shifted already, and now it's met one of the objectives, if that makes sense.
Yeah, thank you, brother. Thank you for explanation. Oh, yeah.
So obviously there's different types of 1-minute highs and lows. But if it's formed as more of a prominent 1 minute high and a prominent 1 minute low, for example, like this 1 minute high is more prominent than for say this one, right? So price right now, if it was to shift, it would shift above this high. But this high is not a point to shift market structure. This would be minor buy side. If that makes sense.
Yeah. Thank you, brother. Thank you.
All right, perfect, brother. All right, we're back, guys. Obviously, we've now got a quiet Discord channel, exclusive. All right, so we're looking at the lunch macro, okay, and we are seeing a shift in market structure. We have an inverse of a bearish order block. Okay, so this is good to see, and we are gonna have the inverse of the order block, which is now confirmed, paired with the gap, and now a shift in market structure on NQ. We have to closely monitor this high, but as long as it doesn't get taken out, which puts us with equal highs on ES. So NQ taking this high is equivalent to ES taking this equal highs, which would then be a bearish SMT on ES. Now, currently stands no shift in market structure on ES and no fair value gap. So yeah, no gap on ES and no shift in market structure. So with a failed shift on ES, it's likely to return back to this low and actually take London, in fact, which puts NQ in the low probable scenario. That's why we want to see a gap on both and a shift on both, right? So if the model arrives a few minutes before the macro, that's invalid to you. No, it's not invalid. So the model could present itself before the macro, it's fine. The only point that's invalid is your entry to be outside of macro. Your entry must be inside of macro, but the model can present itself here. It could present slightly before. Now there is factors on where we go too far before the macro with the model, and then it becomes invalid, and we'll get into that another time. But as far as it forming 5-10 minutes before, it's fine. But the entry must be at the entrance to the actual macro, so 11:45 essentially. I've taken plenty of entries at the start of the macro. The first second we get in, I've entered because price has been hovering inside of a fair value gap, point of entry. So we can very much see this low to be taken on NQ or on ES to create an SMT, or both, right? So I still like London here, as we had that failed shift on ES. Because even if we shift market structure now on ES, it's going to put NQ above the point of buy side. So regardless, I still want to see price action take a point of sell side. Yeah, obviously, you know, when you guys bounce around the world, going different places, have you ever got to the point where your sleep schedule has done a full 24-hour twist? Have you ever done that? I think one of my friends experienced that recently, where you've actually gone to the point where you've gone to sleep later and later each day until you've done a full 24 hours in the opposing direction completely. Done that quite a few times. And eventually it gets to the point where you do have to do this kind of one of those really long days, So you'd end up going to sleep 7 a.m., 10 a.m., and it gets to the point you're not going to sleep through the day, are you? So then when you're getting to the point of like 7 a.m., when the sun comes up, then you hit one of those days where you do the whole 36 hour where you just stay up and then you don't want to go back into the cycle. Yeah, it's one of those like 36-hour flights, yeah. The best thing, for long flights of what I do, if you are in a country, right, which isn't first world and you can just walk into the pharmacy and buy it, get your hands on a diazepam and just pop one of those before you get on a flight and you'll be out. You'll be out. But obviously, take it if you've got a flight over 9 hours. 6 hours, like, Bangkok to Abu Dhabi, which I'm doing in 2 weeks. It's not Daisy worthy. Yeah, some of the worst flights I've done would be, I would say, Colombia to Dubai. That was pretty bad. Pretty bad flight. Because to get out of Colombia, you don't really have that many international flights. There is a few which go quite far, but not many. Depends where you are in Colombia, to be honest. I only ever go to Medellin or... That's it, yeah. Street food galore. See, guys, be careful of this street food stuff. Because if you catch yourself on... I don't touch it personally, but you really got to be careful, I've seen some crazy stuff. They tell you it's chicken. I've heard the stories. I've never ever tried it in my life. I'd rather eat McDonald's every day, But I've seen them claim it to be chicken and it would be something else. Can't even name it. It's not even just China. That's just, third world countries in general. It's all over the place, Wherever there's a shortage of money, they're always going to try and maximize their profits. But inside of this Discord, we don't talk about street food. We talk about Japanese Wagyu steaks, aged. We're not here to be dealing with street food and starting new illnesses. But don't get me wrong, it's definitely many places in the world that got some great tasting street food. But it's like, how far do you want to take taste until you get death? So I'd rather get, $1,000 steak or $100 steak, whatever it is, and have that. To picture it like this, you wouldn't have a street cigar, would you? You'd have finest cigars. So let's have the finest food to go with it. You wouldn't have a street female, would you? Body count of 1,000. You'd have the finest females. So we gotta go for perfection. We're going for the best. No, I'm only joking, guys. Only joking. But yeah, we do go for the best, I'm not joking about that. Well, I mean, some people find it funny about, street female, but, it goes both ways, you got street male as well, but they're in business. They choose to do it as a job, or they don't choose, they get put in that position, and it's a sad point of life that some people get, pushed into, which they have to do. That's just reality for some people, you know what I mean? Someone said 1146 as an entry. Well, there's no shift in market structure, and we shifted on ES, but there's no shift on NQ. And this is very much more an accumulation period rather than price distributing. We manipulated below the low, and for it to distribute towards the high. There's no shift in market structure on NQ. Have you looked into real estate anywhere else than Dubai in the Middle East? Now, not really. My knowledge goes as far as Texas, Miami, and Dubai. And that's... Obviously, I've taken other locations into consideration, like the UK. And I think the UK is just really not in favour, you know, for myself. Because I can't really even get some sort of mortgage there, and I don't want to invest in UK real estate. I think the whole country is on a decline, so I don't see a 10-year horizon as very positive for the UK. Potentially even a civil war in 10 years, who knows. As far as, you know, Saudi Arabia, I think absolutely amazing. They have the 2034 World Cup, and they're building some crazy building just for that. So they got money, they got money, you know, falling out of the sky, which is very good for your real estate moves you make there. And yes, the US is good, but then at the same time, if I'm correct, there's more houses available for sale in Florida now than ever before. But does that mean a boost of construction? Because maybe you could argue that there's more houses for sale in Dubai and Saudi Arabia as well. So there's more construction these days than 20, 30 years ago. But as far as what's growing the fastest, I still believe Saudi Arabia is growing faster than Florida. And as far as owning, you don't have to pay any sort of crazy maintenance, tax, insurances, hurricane insurance, all of these different things that you have to pay. You know, doesn't sound like a lot, but why pay it? You know, why? There is no income tax as far as rental in Dubai. As far as a business standpoint and money's going to flow to what is ease, right? And what saves, you know, high value investors the most amount of money and makes them the most. And that really is the Middle East and Saudi Arabia. That's where all the money's flowing. Not just because of oil, because of business. Income's not taxed from trading regardless, whether I'm living in Dubai or not. But living in Dubai, you there or thereabouts don't have to pay too much tax. You have to pay a little bit of tax, around 8%. Nothing too major. And you can get that down to around 4%, you know. So far in this lunch macro, there's not been anything. And if you guys ever think I waffle too much or chat some shit inside of the stream, you know, just, you know, let me know if I bore you guys to death at any points. We're having an overall discussion, you know, about certain topics. So as far as setting up a free zone in Dubai, I've seen your question inside of the Discord earlier actually. Now, I didn't choose to respond to it yet The reason being is because I'm still working on the 0% tax section, which doesn't include setting up in Dubai. So it wouldn't make sense for me to give you the advice for Dubai, which you could in fact set up in Dubai, and it would cost you around 1.5 USD. So nowhere near as much as what agencies would try to charge. And you can go directly with the Abu Dhabi website to set up and then get yourself an Emirates ID, which you can acquire and do all of this within a week. And you know, that's very easily done, and it will only cost you about 1,000 or 1.5 USD, and then you have to go to one of the offices in Dubai. You take your passport, they take a photo, and whatnot, and then everything's pretty much set up from there. And you can very easily now ask ChatGPT on how to set up and what works best for your current situation, whether you need, you know, what type of free zone, etc. you need. But in my opinion, setting up over in Nevis is the easiest, and you would do that with an agency. A lot of the agencies in Dubai, they're just trying to make money off you, so they're going to charge you some sort of like $5,000 setup fee. It actually only costs about $500 to $1,000, you know, to set up on the Abu Dhabi website. So don't fall for the businesses saying that, oh, we have 0% tax, we can get you this, this, this. Yeah, I'm sure you can. You know, I can do it myself. So if you want to do it and do it that way, that's the best way. Milo, not boring. I liked how you stayed calm during the trade. It helped me a lot. So thank you. Well, I mean, you know, when you watch, say, other people, they're quite new. It's a new experience for them. When they're in a position, they're going to be absolutely, you know, grip tight to their chair, and if it hits TP, they're launching it out of the window. So they're not thinking about their actual thought process to the trade. They're not thinking, how am I going to manage this? As far as a backtesting standpoint, that's how you have to treat your live trades, as a backtesting standpoint. So think about thought process. Don't think about your current P&L or ticks or whatever you have your P&L set against. If it's ticks or dollar amount, regardless, you're actually looking at a standpoint of, okay, I'm managing my risk from this. So the 5 minute is neutral and the 15 minute is bearish. The 1 hour is bullish, so we're neutral, and the 4 hour is neutral, so we're neutral. 1 day neutral, 4 hour neutral, 1 hour bullish, 15 minute bearish, 5 minute neutral. So they cancel out. Any advice on how to exactly backtest this model? Well, inside the Discord, scroll to the top, click the checklist guide, screenshot it, have it in your camera roll, go over to TradeZella, select a month of the year, 3-month period, and start each day 1 hour, 2 hours a day, and backtest it. Work through session by session. Make sure you do not make any mistakes and deter from the model. When you're in a position, manage it correctly, and you will automatically track your results and trades inside of TradeZella, and use a 50k account. In the Discord, on the risk management section, use the eval or the funded, choose whatever. I recommend the funded, and treat it as if it is a funded account. Drawdown applies. If you drop below that drawdown, you then go onto account management section and manage it accordingly, and you simulate it as much of being live as possible, and that will be your result from that 3-month period. And whether you choose to start midway through the year, last year, whenever, you know, that's how you backtest. Wouldn't the 15 minute be neutral now? The 15 minute would be bullish. So we inverse the bearish gap, so it's bullish to the next 15 minute high or bearish gap. Okay, so this is the 15 minute draw, it's bullish. So we have bullish 15 and bullish hourly, so we have a bullish bias. So all it means on the 15-minute time frame is that we have bearish PD rate as far as the bearish gap inverse, which shows a sign of weakness to bearish movement on that specific time frame. So it's obviously a bullish confluence for it to draw up towards this high. Same with the hourly as well. The hourly's got to draw for that high as well. So it'd be more of a prominent point of buy side, right? All-time highs. So obviously these are the highs from earlier that we was looking to target. Yeah, that's correct. Yeah, at this point we are so deep in premium territory. That is correct. The chances of getting a model now is quite slim, because it's not where we're mid-range of price action. Being closer to all-time highs means that we're limited to be taking shorts. We can't take shorts because our bias is either bullish or neutral, because we're working out of no bearish imbalances. So we can only take a position if price was to take sell side, and then we can take longs. So we're only limited really at all-time highs to trade with all-time highs to aim towards a new high. You know, that's why our model kind of limits us from taking dumb short opportunities that ISD traders continue to get stopped out again and again and again. And what the model allows us for is that once the higher time frame does show signs of weakness, where we see more of an hourly or 4-hour shift lower in market structure, then that's when we actually will form some sort of bearish bias and we can trade with that. I'm just looking at the profile pictures here inside the group. I see someone might have a track halt. Noah might have a track halt. Or maybe it's just a profile picture. Dream car, I mean, you will have it. You will have it. What colour are you going to get your track on? You know, no, we have no doubts. Your car is attainable and it is waiting for you. Full black, yeah. Sick. That's mad. And I'm guessing that you would get red interior, or would you get black or white? Yeah, red's pretty classic with the matte black finish. Obviously price is traded up to now buy side, so we are not going to see any sort of opportunities here. So guys, that is us done for Tuesday. And tomorrow is a non-tradable day. However, it is an educational day. So we will be going live tomorrow, as per usual, 9:20 AM New York local time. But tomorrow is different. We are backtesting inside of TradeZeller, a backtesting session, going through the model and answering questions. Okay, so I will see you guys. For those of you that want to join. If you don't want to join, or you want to sleep, feel free. It will be recorded and uploaded on YouTube privately, so you guys can re-watch at a given time. Take it easy, guys. Have a great rest of your evening. I'll speak to you guys tomorrow.